My name is Jason Mayer. I'm a portfolio manager at Sprott Asset Management. I'm responsible for co-managing Sprott's FlowThrough limited partnerships. FlowThrough shares are shares issued by Canadian resource companies from Treasury. The companies that issue these shares agree to expend the proceeds on exploration-oriented activities. They also agree to renounce or flow through those deductions to the purchaser of the shares. Now, it's important to note that this is actually written to the Canadian Income Tax Act. On line 224, you'll see the space where you actually deduct exploration expenditures. So what the purchasers of these shares are getting is an investment in a resource company, and it's 100% tax deductible. Flow-through limited partnerships enable investors to purchase a portfolio of flow-through shares. The way it works is that the investor purchases units in the partnership. The partnership then takes those proceeds and purchases flow-through common shares of Canadian resource companies. Those companies agreed to renounce or flow through those deductions to the partnership. The partnership then distributes those deductions on a pro rata basis to the investors who initially purchased the partnership units. So at the end of the day, what the investor is getting is a diversified portfolio of Canadian resource companies. They're gaining access to professional management, and their investment is 100% tax deductible. The primary benefit of purchasing flow-through limited partnerships is that the investment is 100% tax deductible in the year of investment. The partnership has typically a 2-year life. At the conclusion of the 2 years, the partnership units are going to be exchanged for shares in Sprott's corporate class mutual fund. At this point, the investor has 2 options. Number 1, they can immediately dispose of their mutual fund shares. The consequence of doing so is that they trigger a capital gains tax liability. The second option the investor has is they can remain invested in the corporate class mutual fund. If the investor does in fact choose to dispose of the mutual fund shares and trigger that capital gains tax liability, a certain degree of tax efficiency can be introduced if this investor does have capital losses that they can use to offset the capital gains tax liability. And in fact, the overall after-tax return would be substantially enhanced. First and foremost, it's important to recognize that this is an investment in the resource sector. So anyone who's purchasing flow-through limited partnerships have to be comfortable with the risks associated with investing in resource stocks. Now, ideally, this structure is suited for those investors who are consistently earning high levels of income on an annual basis. They're taxed at the highest marginal rate. Sprott is the leading investor in the Canadian natural resource sector with a 30-year corporate history. Currently at Sprott, there are teams of investment professionals that manage multiple natural resource mandates. These teams are supported by Sprott's in-house technical expertise, which includes both geologists and engineers. My experience in managing flow-through limited partnerships spans many years. Most recently, I was on a team of portfolio managers at one of Canada's largest flow-through fund management companies. Typically, the companies I select will be companies that are producing and cash flowing, and the portfolio will then also be complemented by advanced exploration companies as well as mine developers. The reason that I favor companies that are producing and cash flowing is I truly believe that those companies have some identifiable value. They provide the portfolio with some downside protection, so that when there are difficult markets, there's going to be some preservation of NAV. With respect to sector allocations, I typically look to a more balanced approach, understanding that this is a 2-year fund. You have 2 years to let the investments do their work, and over that time, usually is a constructive outlook for the various sectors that I will be investing in.